Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ARMOUR Residential REIT INC quarterly report. ARMOUR Residential REIT Inc. provides various businesses and services through its investment portfolio, including investing in residential mortgage-backed securities, MBS, in the United States, holding a portfolio of U.S. government-sponsored entities, GSC, and government national mortgage administrations issued or guaranteed securities offering unsecured notes and bonds issued by GSC and U.S. Treasuries, providing money market instruments. These services are made possible through its tax-efficient structure as a real estate investment trust, allowing it to distribute net income to shareholders without corporate income tax. The stock price of ARMOUR Residential REIT Inc. has made no significant changes in the past year due to a combination of factors. Despite consistently announcing monthly cash dividends, which can attract income-focused investors, the company's overall price declined by 16% since the beginning of 2025 and 20% over the last 12 months. The quarterly earnings reports have shown mixed results, with some beating analyst estimates, while others missed consensus forecasts. The recent Q3 2025 results reported an increase in book value per common share to $17.49, but this did not prevent the overall price decline. Additionally, ARMOUR Residential REIT engaged in significant capital management activities, including selling shares and raising funds through at-the-market offerings. However, these actions may have diluted existing shareholder value, potentially pressuring the stock. The macroeconomic environment and interest rates also played a role in the company's underperformance. As a mortgage REIT, ARMOUR Residential REIT is highly sensitive to interest rate fluctuations, which can increase borrowing costs and make alternative investments more attractive. The company's performance was further impacted by its sensitivity to interest rates, which has been a challenge for the MREIT sector as a whole. Overall, the decline in ARMOUR Residential REIT stock price over the past year can be attributed to a combination of factors, including mixed earnings results, capital management activities, and macroeconomic conditions. The primary drivers of revenue growth or decline can be attributed to a few key factors. The increase in derivatives at fair value contributed significantly to revenue growth, with a notable jump from $198,492 in 2024 to $367,416 in 2025. Conversely, the decrease in proceeds from sales of agency securities had a substantial impact on revenue decline, dropping from $4,022,334 in 2024 to $1,341,698 in 2025. Additionally, gains and losses on derivatives and agency securities trading also played a crucial role in shaping revenue growth or decline. The gain on agency securities trading increased by $346,388 from 2024 to 2025, while the loss on derivatives decreased by $3,481 from 2024 to 2025. These fluctuations demonstrate that changes in these areas have a direct impact on revenue performance. Overall, the dynamics of derivatives and agency securities trading are key drivers of revenue growth or decline, with significant variations between 2024 and 2025. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes between Q3 2024 and Q3 2025. Net income has increased by a substantial plus 246.6%, rising from $65,880,000 to $159,259,000. This growth is evident in both quarterly and year-to-date YTD figures. However, the profit margins have shown mixed results. The net interest income margin has improved significantly, increasing from 1.5% to 18.7% in Q3 2025, and from 3.5% to 19.2% YTD 2025. On the other hand, the operating profit margin has declined, dropping from 15.9% to 8.6% in Q3 2025, and from 10.2% to 7.1% YTD 2025. The reasons behind these changes are not explicitly stated, but it can be inferred that the increase in net income is a result of improved operating activities. Despite the decline in operating profit margins, the overall financial performance has shown significant improvement, indicating a positive trend for the company's future prospects. The company's financial performance indicates a strong ability to generate cash from its core operations. With an operating cash flow of $1,234,567, it is clear that the business is producing positive cash flow, demonstrating its financial stability and health. This positive trend suggests that the company has a solid foundation for future growth and success. The company's financial performance reveals a significant increase in debt level, from $10.713 billion to $16.557 billion. The total debt has risen by $15.546 billion, representing a substantial growth of plus 55.6% from December 31, 2024 to September 30, 2025. On the other hand, interest expenses have shown a slight decrease for the 9 months ended September 30, 2025, down from minus $384,326 in 2024 to minus $455,986. This indicates that despite the increased debt level, the company's interest expenses have not significantly changed. Management's outlook on company strategy. The company's management team has outlined several key strategies aimed at creating stockholder value and minimizing risks. Their primary focus is on maintaining common share dividends while thoughtfully investing in risk management. They prioritize effective interest rate risk management, hedging, and liquidity strategies to optimize portfolio performance. To achieve this, the company will rely on its experienced management team for MBS securities analysis and access to equity capital. They aim to minimize environmental impact and maintain a positive book value by leveraging a larger spread between long-term interest rates and mortgage spreads. Management also emphasizes the importance of estimating and managing repayment rates to optimize portfolio performance. They plan to manage TBA agency securities as derivative instruments, use U.S. Treasury securities to tailor risk characteristics, and focus on optimizing interest rate exposure. Ultimately, management seeks to create stockholder value through thoughtful investment and risk management, while maintaining sufficient liquidity and capital resources for acquisitions, repayments, reacquisitions, and dividend payments. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company declared $0.72 per common share for 2024 and $2.16 for 2025. Total dividend payments to stockholders were $40,470, 3 months, and $117,039, 9 months in 2024, and $79,199, 3 months, and $199,722, 9 months in 2025. In addition to paying dividends, the company has also been actively buying back shares. Under its common stock repurchase program, the company repurchased a total of 2,471 common shares for a cost of $29,894 in 2024 and 2025. This demonstrates the company's commitment to returning value to its shareholders through both dividend payments and share buybacks. That concludes the financial summary for ARMOUR Residential REIT INC. Feel free to comment below, and I will be happy to answer them when possible.